Happy Friday, everyone. Today is the last day of the week and very, very close to closing up this month of July. It was so quick. Literally, it was so quick. But we made it, so, lots of releases happening over the month, and especially a few from USA. And just yesterday we had another release for the retail sales, okay? Also the CPI for Europe. So I want to go through those two releases and explain a little bit more in depth of what can we expect for the next week. Also, just because next week we're going to have the Fed, okay? So next week we're going to have the Federal Open Market Committee, that's the FOMC, and that's going to be the rate decision. 98% already of the market is expecting no cuts, so maintaining the rates at 425 to 450. But let's get to a few things before we go to these topics, and then we can actually, talk a little bit more in depth about these topics. So first, subscribe to the channel. Second, thumbs up on this video. All right, that's all you need to do. And if you want to join me on the Telegram, then the link is on the description. You can just go there and join me. It's for free. And also on the Telegram, every Tuesday, Wednesday, Thursday from 4 to 5 p.m. Sydney time, I send the link for you to join on the webinar. Okay, cool. That being said, let's get to the point. So yesterday we had the CPI for Europe at 7 p.m. Australia time. Everything was in line with the expectations, and the expectations were pretty much in average neutral to bearish, okay? So just continue to fulfill my thinking of most likely the ECB will continue to cut, and therefore the euro will continue to weaken, and therefore the US dollar will continue to strengthen. So euro dollar continue to be a good short position until 1.15, okay? So $1.15 is my target for the euro dollar, and it has been quite a while for those who have been following me into the channel. Now, after that, at 10:30 p.m., we had the core retail sales and the retail sales for US, the month of June, and again, month of June. So both of them, they came higher than expected. So the core retail sale was expected to be at 0.3%. The actual came in at 0.5%. The retail sales month was the consensus 0.1%, and the actual came in at 0.6%. So pretty high, okay? If we look for the core retail sales and the retail sales, both of them higher than expected and higher than previously as well, what we can expect is majority of the population is spending quite a fair bit of money. So therefore, inflation will continue to rise, okay? As I said, the inflation, the headlines for the CPI into US that we had the release on Tuesday, they were, on the surface, everything seems fine. But when you dig a little bit into the data and you go to the BLS and you look into these and like, there's something there, because it can't be, everything fine with tariffs coming in, with trade wars and everything else. It has to be a problem somewhere. And that's exactly where we found, okay? Because majority of the furnishing is already getting affected by the tariffs. Household spendings, they are increasingly, okay, and not because the price are going, not because the population have money, but because the price have been going up into the household goods, okay. So just bear in mind, inflation is still sticky into US. Don't get into the rhetoric that, okay, we had the release and it's everything fine. No. Most likely we will see some uptick into the inflation in the coming quarter, and this will drive the Fed to cut only 50 basis points for the last quarter, so the last half of this year, right? So we only get now 5 months, I think, or something. From those 5 months, we only got 3 from the Fed. So most likely a pause next week, and then a cut. We don't know what's going to happen. Most likely a pause again, and then a cut. So 50 basis points priced in, completely priced in. 75 most likely, but 50 completely priced in for the Fed for the third quarter and the fourth quarter of this year. Cool. That being said, now my positions is still long US dollar Japanese yen, short euro dollar, short the pound dollar, and short the Australian against the US dollar. Just yesterday, we had the unemployment, one of the biggest unemployments since COVID 2022 in Australia, 4.3%, if I'm not wrong. Yes, 4.3% has been one of the highest. Okay, so RBA is not looking to these. RBA is more likely looking into the inflation. So we probably can expect a few more cuts from the RBA this year, and that will drive the Aussie dollar strength down. Cool. Thank you so much for being with me this week, guys. Don't forget to review your trades during the weekend. If you have some time, do a little bit of study, prepare yourself for the week ahead, and don't forget to join the Telegram, because on every Tuesday, Wednesday, and Thursday I have the webinars from 4 to 5 p.m. Sydney time, and I also subscribe to the channel as well. Okay. All right, thank you so much. Have a great weekend, and I see you in the next video, or I see you into the webinar next week. See you guys. Bye-bye.